All right. All right, everybody. Welcome to the, what is this? Today is 9/28/2024. Weekly recap, right? So this week was really good. I really loved this week, right? And I'm gonna show you guys what the goal was going into this week. I felt like we all on the team, we did a really good job executing our strategy. There's definitely been a lot of progress, and I love seeing that, right? Because once you start viewing the market in a more structural basis, right, where you're watching market structure, you're watching not just market structure, but how price reacts to the levels. That's one thing I did a lot this week, and it was extremely beneficial. Right, so we're gonna dive right into it. This was last Friday, this price action. So going into Monday, price action kind of looked like this, right? We had previous day high, which is the highest price from the previous day. We had previous day low, which was this 56516 level. Very, very important level. I'm thinking of 57293, right? But still, very important level from the previous year, right? This level was the all-time high for the longest time, right? If I whip out the daily time frame, this yellow line right here, 56516, it was a massive supply zone, right? Sellers showed up once, twice, three times, and then boom, price rallied above it, right? So going into the week, we were playing with this level, right? Very important. Let's go back to that 1 hour. And just so everyone knows, during these weekly webinars, I like to look at each day from our top-down approach of the 1 hour time frame and how I came up with the pre-market plan that I did and how I use that to then execute trades. So we have previous day high, right? Previous day low, and now I'm going to map out end of day, right? I'm going to take this guy. Boom. So end of day was at 56812. Hold up 1 second. All right. All right, my TOS is acting a little funny, but that end of day played a very, there we go, I got it. Maybe. Okay, hold up. There it is. Okay, so let me label this. End of day, boom, EOD. Okay, so pre-market plan, right? I was watching the 1 hour 50 very closely, right? So I have my critical levels, and now I got to play the bullish and bearish scenario, right? So how that works is any buying acceptance, right? I want to be able to identify bullish market conditions, right? And understand that buyers are showing up. And in that case, I'm going to look for longs targeting 57293, right? That was kind of my idea going into the day. And then if sellers showed strength at previous day high, I was going to then look to take a short play, maybe down to EOD, and then down to our 56516 level, right? So once again, the 50-50 perspective is like, okay, if buyers hold these levels, price is going to go up here. If sellers hold these levels, price could go here, right? And it's not a real specific approach, and that's my intention, right? I don't want to get extremely specific, because the more specific I become, the more like attached or married I get to the trade plan, right? And I want to be like water. I want to be able to get in and out, right? I want to be able to watch the market do its thing, right? Price action to do its thing, and to watch it objectively, right? Not to assume or try to predict anything. I want to react to it, right? So we have our 1 hour 50 that's right in the middle of it. And then price opens up, right? So now let me break into, I'm going to whip out the 5 minute. Let me do this. Okay. All right, so price opens up, and I really used that 1 hour time frame a lot going into this. I'm going to pull it up right here so that we can all see it. But more or less, price action was just very choppy, right? It was very choppy price action. We initially, previous day high and open print were literally the same price. So once again, anytime any two critical levels are aligned, you have to watch that, right? You have to kind of pay attention to that. That's very important, right? So, hold on, I just want to make sure. Okay, people are here. Everyone can hear me. Okay, just making sure. Okay. So now we get open print and we get PDH, and then price sells off, and we start to get this back and forth between end of day and PDH, right? And there really wasn't anything appetizing here, right? Like, yeah, we got above the 50 EMA. but we couldn't really get the market structure I wanted for long plays, right? So I was very patient here. I just didn't take any setups, right? Kind of like Friday, where, you know, I sometimes it's best to remain patient and just to watch price. We had upside target right here of 570.95, but we really couldn't get that acceptance above previous day high, and we couldn't get that acceptance below open print, right? And one thing I want to point out here, right, is notice the EMA cloud, right? The EMA cloud is green, right? So there was an old, what was it? Like an old rule of mine, right? Which I guess I could say I've kind of adjusted a bit. But one of my old rules was I did not short green EMA cloud. And this was one of those reasons, right? It kind of helps you understand if it's choppy or not. Watch how when price finally, once the EMA cloud finally turned red on the 5 minute, right? We were a price closed below the 50, and then we come up. Hold on. And we retest the cloud, and we retest the 50, right? So at this point, I was willing to get in the market short. We come into this level, right? And you could see we didn't really tag open print. We didn't tag previous day high. But the main thing I was playing here was just a very simple trendline break. Like I was just trying to identify a way that market conditions were shifting, right? So we had a low, a higher low, and now we're getting a break of this little 569 level, right? Which lined up perfectly with previous day high, right? So I finally got that break below the 50. We held below the 50. We came into the EMA cloud, and then I shorted down to end of day, right? And once I seen like this wick right here, right? So I got in short on this red candle, right? And then my stop loss was above open print and PDH, right? So we're in short here. My stop's up here. I'm risking about 40 cents here to capture a dollar move almost down to low of day and end of day, right? So that was my trade plan going into this. Wasn't necessarily the largest trade or the biggest trade, but this is what me and Darren were talking about with these are going to be 80% of your setups, right? Like when you go back and look at your journal, 80% of the time you're going to be taking trades like this, right? Where the market's, you know, it's not really trending in the way you want it to, right? And you have to be able to be, like I said earlier, like water, where you watch this this shift happen, right? Like another thing I seen here was we had a high, then we got a lower high, right? This is a very bearish indication, right? So that was another thing helping me get into the short play. I took the market short. I scaled most of my position out here, and then I ended up stomping out of the rest of my position right around this candle right here. So once again, I felt like I managed the trade very well. And for a Monday, it makes sense, right? Sometimes you get some very choppy price action in Mondays. So that was the only trade I took, right? There really wasn't much other things going on. There wasn't, it was just like Friday, right? It was a very choppy back and forth market, and we have to be able to identify these and sit on our hands when we're supposed to. So yeah, that was Monday. Now we're up into Tuesday. Let's see here, boom. All right, so Tuesday was a really good day, right? I was really proud of the way I traded Tuesday. And one thing I want to point out here, right? So look at the 1 hour time frame, right? This chart on the left. One thing I want to point out right here, see this purple line? This purple line is 570.95, right? Like we said yesterday, or like we said on the day before, this was our upside target, right? Josh, where did I get this upside target? It's literally Friday's end of day, right? So once again, this is the cool thing about pit numbers, right? Because if you don't see this level, it's very easy to be like, oh, any buying acceptance above 570, I'm targeting all-time high. And then you neglect the area of liquidity that's between that, right? So this was a level I was watching very closely in Tuesday's pre-market, right? So in Tuesday's pre-market, there was a bullish and bearish scenario. Number one was any buying acceptance above this level, right? I was going to look for longs targeting all-time high, right? Which was this level, 57293. But any selling pressure at this level, I was going to then start to look for shorts in the event we could get below end of day, right? So this was our sweet spot, right? This was the level I really didn't want to trade in, right? I was okay trading above it, and I was okay trading below it to target previous day low, but I really didn't want to trade in between it, right? This is our chop zone, right? Like this is still this is where most of the battle is going to happen, but I'm going to use the price action at this level to determine my next play. Right, so that was my bullish and bearish scenario going into the day. And once again, I was going to use that 1 hour 50, which is this orange line right here, right, to kind of determine bullish or bearish, right? Because if sellers are in control, they'll take that 1 hour 50. If buyers are showing strength, they won't let price fall and close below it, right? So that was our pre-market plan going into the day. And then you could start to see here, right? We rip into 570.95, and then it looks like almost automatically we started to get some pretty strong selling out of this level, right? And now price falls. Oh man, this was such a good day. Price then falls right here, and now we get open print, right? So open print established right here. Price action didn't touch it, so I'm not. Well, I'll draw it for just because it's my process, right? So here's open print. Right, this purple line. Price falls into end of day. And remember, right here, I don't want to trade. I don't want to trade anything in this level, right? Because it's in between 570.95 and it's in between end of day, right? I want to use this sweet spot to determine who's going to, I want to identify what price action looks like in this sweet spot to determine who's going to take a hold of the day or the trend, right? Now, a couple things I'm noticing here. Right? We fall below the 50, right? The purple line, very bearish. The cloud turns red. Once again, very bearish, right? So on this trade, we use the 2-minute time frame. Whoa. All right, hold up. Give me 1 second here. And then we fall into end of day, right? We fall into end of day, and price is bearish and kind of choppy, right? So everyone knows how much we love the green bar ignored, right? Notice here, I'm not really getting too many green bars that were ignored that well. This one was, right? This was a green bar. You could have definitely shorted this, but remember, I didn't want to short this one because it's in between my sweet spot, right? So I held off on that one, right? That's the chop zone. Price falls below end of day. Now, these trades can be kind of hard. And I'm going to tell you what helped me pull the trigger on this trade, right? The main reason I got in short on this candle right here. This is where I entered short on this red candle, right? Now, it fell down to end of day, right? It closes below end of day, and then we get the green bar right here that was completely ignored, right? So here's our green bar. This is our guideline, right? So when I get in short, my stop must be above this green bar. That is very important, right? I'm not going to get in short here and put my stop here, right? If you do that, you won't last in this game, right? This strategy is phenomenal, but it does not work every single time, right? No strategy does, right? It's not even our job to find the best strategy. It's our job to trade the strategy the best, right? This means great execution. This means being able to see it, spot it, and act on it with low risk and abide by those rules, right? So we fell below end of day, we closed below end of day, and then this red bar knocked out this green bar. I got in short, and price literally bottom dropped right out into PDL, where we took profit, right? This was a phenomenal, amazing trade, and it happened very quickly. And it just goes to show, right? When you're trading these strategies, right? There's a lot of buyers getting in the market. There's a lot of liquidity here. And once sellers, right, really take advantage and come into the market very aggressively and they knock buyers out, this is the selling pressure you get. Boom. All those buyers start stomping out and the move just rallies. We literally got a very similar move the next day, which we're about to go over. Right? So that was an amazing trade. That was the only trade I took that day. And I was very proud of this trade. It was just real quick. And more importantly, what I want to point out here is the reason why I was so proud of this trade was the way price came into end of day and the way buyers showed weakness. Look at this. We can never get another high, right? Like once price opens up, I'll mark this green candle, right? And I'll be like, okay, can buyers push price above 570? Nope. Boom. Sink below. Then I'll mark this green candle, right? And then we get the first GBI, right? Green bar, ignored. This candle literally wiped out 3 of them. That's Todd's specialty right there. And then this thing drops off. Then you get this green candle. You're below end of day. At this point, I'm going to get in short, stop above it. You can see here we're risking 30 cents on a potential $1.80 move to the downside. So these are the setups that you really want to get good at seeing. Boom. Yeah, very, very good day. And then you can see for the rest of the day, I mean, the chop was intense. It was really intense. Price came down below previous day low, couldn't hold. You know, not to get too far off course here, but it made a lot of sense why it couldn't hold. Look at how far we were extended from our moving averages. Where did my 9D EMA go? Must have fell off. Hold up. Right? Look at this. See this blue line? Right? This blue line is the 9D EMA. All new traders on HPT, you must put this on your chart and ask me about it. Right? Send me a message. Say, hey, how do you use the 9D EMA? I need to make a course on it. Because it's really good. But more importantly, it's as you grow as a trader, you start getting better at identifying what a healthy trend looks like and an unhealthy trend looks like, right? This price action on the left, this is healthy, right? Very healthy, these green candles. This sell-off right here is not healthy because price is literally how far away? Price is $2.50 away from that blue line. You're definitely not going to want to continue trading with the trend, right? Anytime you get extended from a moving average, there's a very high chance that price is going to come back up to it, right? So that's what we call the snapback, right? Price comes right into previous day low and snaps all the way back up to the moving average, right? Very, but I was done. The short play was good for me, and that was it. All right, let me get rid of some of this stuff. I feel like there's a lot on my chart right now. Boop. Okay. This next day was one of my better days this whole month. I took 2 trades on Thursday, and I just made a YouTube video on this day. It was phenomenal. Let's do this, right? We're gonna break it down. This is all-time high, right? I'm going to make it yellow. Right, so we have all-time high. Let me just get rid of all these lines here so that we don't get... All right. Okay, so we have all-time high. Price looks like... Hold on. No, that's not all-time high. I was going to say, what am I talking about? Wrong day. Okay, hold on. What's this? This is... Tuesday. Okay, here we go. All right, so going into 9:25, that's the day I'm talking about. Okay, let's talk about this day. And it's like 3 days out. Oh, this day was actually pretty tough for me. I took 1 losing trade this day and walked away. So quick breakdown. We had previous, and it was kind of frustrating because we had previous day high. All my analysis was phenomenal, but I let the chop squeeze me out of my trade. And we're going to talk about it, right? So going into this day, obviously, I'm looking for bullish conditions above PDH to target all-time high. And then if sellers take control of PDH, I'm going to get in the market short, and I'm going to target pre-market low. That was pretty much my analysis, right? And if you look at the price action, dude, Josh, why didn't you do good? It literally happened. Well, let's talk about it. It's very important. Right? So price opens up. Some things I'm noticing here. We're holding the 50 EMA, right? Price rallies above PDH, right? Not really a bad long setup right here, but I just didn't want to take it, right? I didn't like what the moving averages looked like on the 1 hour. I think there was another reason. SPX. That's why. SPX was actually ripping into a very important level, and I didn't want to long it. Then price falls below and closes below the 50. This isn't very bearish, but it's the beginning of bearish conditions. And, excuse me, this, right? Remember, my bullish scenario is buying acceptance above PDH. This does not look like buying acceptance. This looks like sellers are coming into the market, right? Or they're at least trying, right? The buyers that showed up here are, they're not showing that much strength. We're coming into open print. We close below open print, right? This blue line is open print, right? So we close below open print, below the 50. We come up, we retest previous day high, and I'm in the market short, right? We get a very nice head and shoulders pattern. I got a phenomenal entry on this trade. I literally got in this trade at like 57129, right? I was, and I'm risking, hold on. There we go. So I get in short. I felt like I kind of got in early. I'll tell you why I got in. End of day in PDH, we're right here. We rip into it, and then we close below end of day. We close below the cloud. We close below previous day high, and we close below the 50 2 candles before. So I was willing to get in short here, right? I was like, I'm willing to get in this short and play a move to the downside. I really didn't feel like buyers had it, right? And it's because my bullish and bearish scenario, right? If I'm looking for buying acceptance above PDH, this is not buying acceptance, right? And that's a skill for any new trader. Is that's one of the things we want to learn is what does acceptance look like? What does bullish trend, strong buyers look like? And what does weak buyers look like? What does strong selling look like, right? And right here, you're seeing weak buying, and then you're starting to see some strong selling coming in. You're getting a break, you're getting a retest of a critical level. Get in short. And then price literally sells off, and I'm up like 28% right here on my SPX puts. And I was trading one SPX contract, so I was just looking for a clean move. And and this happens all the time. The day before was a phenomenal trade. Day before that was like 100% ROI trade. So sometimes our mind starts to associate a good day with a large return, and that's not the goal. And I feel like that kind of happened to me here. I probably wouldn't have took profit there anyways. But anyways, price reverses on me. Notice we're extended from the blue line down here, right? Very extended. We're very extended from the cloud. So it makes sense that price rallied back up. Price rallies back up, and then right here it comes up to my entry, and I'm trading 0-day SPX options. So right here I'm down like 12%, right? It didn't knock me out. My stop loss was above this candle right here. So I'm good. And then price comes back down, and then once again I'm up like what is it? I'm up like, I don't know, 20%. And then on this candle right here, and I put in the Discord, I was like pulling my stop down to open print, right? And you know, I was obviously playing this GBI, right? This 5-minute. And hold on, Mike. There we go. So this green candle, right? It was almost ignored. So at this point, I'm like, okay, I'm going to put my stop above this green 5-minute candle and then play my move to the downside. And then this guy right here comes up, bam, tags me. And then once I got tagged, I was like, okay, I'm just done for the day. But I knew, I didn't know, but I had a very strong understanding that the market conditions were choppy and that I probably just got, I got stopped out of my trade. I became liquidity for the move down. And that's literally what happened. And this is another thing about trading, right? Is like, you know, and it's up for debate, right? Did I do the right thing? Did I do the wrong thing? Really, there's no right or wrong answer, right? The fact that I approached the day with a good process, and it just goes to show, right? Me adjusting my stop probably wasn't the best idea considering the conditions we were in. I mean, they were extremely choppy. This one candle right here, it don't look like a lot right now, but you know, this one candle right here, I'm up 20%. Right here, I'm down 20%. Right? So like, we have to be able to accept certain things, right? And this is just going to happen. It's part of the game. I documented it very well in my journal. I did a lot of, logging on this and developing a better plan going forward. And it is what it is. But then the market continued to do exactly what I wanted it to do. It was very choppy, but it did do what I thought was going to happen, right? So at the end of the day, I'm really not mad about it, right? And on the contrary, I'm actually, it strengthens the belief I have in the strategy. And the fact that, you know, I was right, my timing was just off. And it is what it is, right? It was completely fine. That was the only trade I took this day. And then now we'll go into the next day. Okay. All right. So this was the day I was just talking about. Let's do a quick 1 hour approach. Look at what the market looks like here. And I wrote, and now this day that we're going into, we're gapping up. Hold on. We're gapping up like $7, right? Or I'm sorry, $5. End of day's at $5.70. Let me get rid of this guy. Boop. Okay, there we go. Gapping up $5, and we're well above all-time high, right? All-time high is 57293. So the way we painted this in the Discord was I wasn't going to make a move until I seen price action at 57293. I wanted to see a retest down in this level before I made any moves that day, right? This is a very clear break and retest. This is market structure to its finest, right? And just because this is a somewhat bullish chart pattern does not mean it has to end bullish. What happens when a bullish chart pattern gets invalidated? Conditions are now bearish. See, so don't be the person that becomes naive and goes, oh, this is very bullish. We're gapping up $5. I'm going to get in long and we're going to rally all day. Don't be that guy. I used to be that guy. I was that guy for a very long time, right? Be the person that sits back, patient, and allows the chart pattern to play out. And if it plays out bullish, we'll trade bullish. But on the flip side, if it plays out bearish, trade bearish. Because if this happens, you're going to probably get a very large move to the downside. And that's exactly what happened, right? So how do we identify the weakness, right? So initially we get the sell-off, right? Sellers come in. A couple things I'm noticing here. We're below the 50. The cloud is red. We're below pre-market level, 574. Now we're coming into all-time high. Getting some back and forth, coming to all-time high. Now, if you guys remember last week, this same level, 57293, I rushed, and I took, once price action came to this level, I took a long play. This was last week, or maybe it was 2 weeks ago, I'm not sure. So that day in my journal, I said, next time we're trading all-time high, be aware of your environment, and do not be the first buyer or seller, right? So all what that means is don't take the first setup you see, right? Just be patient. Let large money hunt everyone else's stop and trade accordingly, right? So price came into all-time high. Remember, I'm looking for either strong buying or weak selling. Or I'm sorry, strong buying or strong selling, right? Or weak buying, right? And we come up and we get ourselves a green candle that's ignored, right? This is one of our strategies, the GBI. We also have one right here, right? So I'm watching price action just do its thing. I'm not rushing anything. I'm not doing anything. And then price comes up, starts to sell off, and then rips back up into this level, right? So at this moment, right, when price action looks like this, I'm like, oh man, this is actually relatively bullish. I'm like, we got a false break below all-time high. Buyers are showing up, but we don't just long one green candle. Right? This is why market structure is so effective. Because to trade market structure, you must be patient. You must be patient until structure forms. And while you're being patient for structure to form, is when all the real moves by large money happen, and then you get to save buying power, be patient, and capitalize on this. Right? So I've seen this. The old Josh would have just been like, oh, buyers are here. I'm in this long target.